Let's dig in now. Doug Flynn, Flynn Zito Capital Management. He joins us. No pressure, Doug. This will have, I'm sure, similar ratings if you perform well to Kendrick Lamar. So we have had a million conversations about inflation. So now we get a CPI, early days of the Trump administration. Where are we? Where's inflation in America right now?
Yeah, it's holding up too high. And if you look at the, you can see the headline number is 3%. That ticked up. That was more than expected. The core number, which we talk about, which takes out the food and energy, was up 3.3 on a year-over-year basis. That's more than expected. But when you look a little bit deeper, you find if you look at the last 3-month trends, or let's say the last 6 months trends, that's at a 3.6 rate. The last 3-month trend is at a 4.5% annualized rate. So it's kind of trending up, and that's not what you want, especially if you are trying to push for lower interest rates. That's not happening. Inflation's hanging up just too high, and the economy is also holding up pretty well. So that's not a recipe for lowering rates.
Well, one person who is pushing for lower interest rates, of course, is the President of the United States. It's actually a question about how does he want the Fed to lower rates, or does he want the rates that are in the market to just come down? I think that's somewhat of an open question, but he did post the following on his social media platform, saying interest rates should be lowered, something which would go hand in hand with upcoming tariffs. Let's rock and roll, America, says the president. Now, Jay Powell, who's the Fed chairman, did speak about, rates, and we'll see if we can translate this. Here's what he said.
With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment.
All right, there you go. Both sides, as usual, from a Fed chairman, but Jay is in no rush. Trump is in a rush, but I do think it's interesting because his Treasury Secretary last week said he's talking more about the market-controlled rates than what the Fed controls. But go ahead.
Well, so the translation of that is just simply that if inflation doesn't come down, or if the economy doesn't weaken, one of those two things has to happen.
Right.
Rates are going nowhere. So let's just get real. And so Trump can project all he wants about lower rates. I think, of course, he does want lower rates, more so for the mortgage market and all those other areas that would kind of spur the economy on. But it's not going to happen until the Fed really sees the data. And we talk about that a lot, but they've got to see the results. And right now, the results are working against them. What we're seeing is against them lowering rates. And if they're going to remain independent, he's not getting rates lower anytime soon. So the market's going to do what it's going to do, and maybe it'll bounce around or maybe ease a little bit, but the Fed is not going to do its part to lower it at all. That's just not happening.
But if he wanted lower rates, his policies would have to reflect that, right? And some say that if you're putting more tariffs in place, which would be inherently inflationary, right, you wouldn't necessarily end up with lower interest rates.
Right. So Trump 1.0, he put tariffs in, and the rates didn't really, the inflation didn't really pick up. It was sub 2%. But this time, everyone's expecting that it will pick up because they're more broad-based. So that's true. If that creates inflation from there, again, you're not going to get lower interest rates if you're going to have more inflation. That's just not the recipe. So I think he's playing both ends. I think he's really hoping for that. If the tariffs kick in and they can get a corporate tax cut, that will really offset things, and then maybe inflation comes down. I think that's what I'm looking for, is to see when they start talking about tax cuts for the extension of the personal ones or corporate tax cuts. I haven't heard anything yet, but he's firing 5 or 10 things a day at us. Maybe one of them will come in at some point.
Yeah, we're going to hear some more here in a few minutes from him, I believe. Thank you, Doug. Kendrick Lamar-like performance there from Doug. We'll get the ratings tomorrow on a closing bell time.